Hello and welcome to another episode of South Africa's Death and Taxes. I am Andre Botma. Today we are going to look at other direct taxes. What is direct taxes? Direct taxes is a tax on the person. Okay? Easy peasy. Or person, which means entity, can also mean entity. So individual, companies, or trusts. The first other direct tax is dividends tax, which is levied at 20%. And it's based on shareholding. So if I have a certain amount of shares with Sasol and they pay out dividends, and say the dividends that they pay out is 100 Rand, first they're going to deduct at 20% the WT, which is dividend withholding tax, 20%, and that means I'm only going to get 80 Rand, but it's going to be non-taxable. It's going to be a non-taxable income. So that's as easy as that. That is dividends withholding tax. It's based on the person's shareholding, and what's nice about dividends tax is that it's flat. So if your tax rate is 45%, if you're an individual and you are lucky enough to earn over 1.5 million, that means that you are still only paying dividends withholding tax of 20%. So that is different to local interest, where local interest matches whatever tax rate you're on, 18 to 45%. The same thing with rental income. Rental income also matches the tax rate that you're on, 18 to 45%. But dividend withholding tax is flat 20%. The next tax we're going to look at is donations tax. And donations tax is on a bona fide, which means real, a real donation. And you're going to pay 20% on a real donation. So it's a transfer of wealth from one person to another. So if I just give my friend 150,000 Rand, SARS is going to take 20% of that. Or donations have 100,000 Rand exclusion. And what that means is you can give your bona fide donations where and when you can, up to 100,000 per annum or per tax year. And if you're confused about what the tax year means, you can check out the previous video in the series. But you get 100,000 Rand, which you can just, or you get the exclusion, which is not taxed. So the amount over 100,000. So in the 150,000 example, so I'm donating 150. I've got the exclusion of 100, which means that 50k is going to be taxed at 20%. Okay? And so the tax on that is 10,000. So the tax on my 150 donation is 10,000 Rand, and that is donations tax. Interestingly enough, estate duty, which is a tax on when people have passed on, that is also 20%. The last direct tax we're going to look at is turnover tax. Turnover tax is a very interesting tax system where certain entities, companies or individuals can register for turnover tax if they meet certain requirements. One of the main requirements is their turnover or sales has to be below 1 million in order to qualify, and they're not allowed to be professional services. What do I mean by professional services? You can't be an accountant, a doctor, a lawyer, an architect. So those type of professions can't register for turnover tax. The benefit of turnover tax is it is on the turnover, and it is 0 to 3%. The first 335,000 of a year has a 0% tax rate. So that means if you're a small business and you've got a low turnover in your first year, you aren't going to pay tax on that. And the amazing thing is, if you were on the normal tax rates or a company tax rate of 28% or normal tax rates of 18 to 45%, even after expenses, you're still going to pay some tax. However, if you're registered for turnover tax, you're going to pay no tax. Now, the one downside of turnover tax is that if you're making a loss, you lose the ability to use you lose the ability to claim a loss, because the tax is on the turnover, not on net profit or net loss. Well, that is it for this episode on other direct taxes. If you have any questions, please let me know. Please put it in the comments of the video. Please like or subscribe if you want to. Follow the series, go back to the first one and catch up. Cheers. I'll see you next week. Bye-bye.